All righty, we are live.
Okay, good morning, everyone. It's 10 a.m. Central Time, and this is our live video broadcast. Randy's here, and I think Tim should be here. He usually comes in a little late. Anyhow, my name's Joe Hooper, and I'm with Micro Moment Trading, and Randy's from Micro Moment Trading. He'll give his introduction here in a minute, and Tim will when he gets in. But right now, we just finished up our weekly morning 1 hour micro moment trading session. These are sessions where we just do micro moment trades. They're usually 15 to 16 seconds to a minute in length, and then we're completely out. We're never in money longer than that, certainly not overnight or over a weekend. And we've had average, we're in our 148th week as a subscription service for that service. We have had an average of over 100% per week over all those weeks. Right now, we're up 83.782% for this week. And so certainly by tomorrow, we'll cross over 100 again. Last week, we ended up about 162% for the week. These are real trades, and our clients participate in those trades, and they report what they're doing. So we know exactly precisely that our clients are doing every bit as good, sometimes a lot better than we do. Anyhow, I'm going to turn it over to Randy and let him talk about our oldest service here. He does not only micro moment trades, but he's got his own variations. And Randy, why don't you take it over?
Well, thanks, Joe. Yep, I actually do all kinds of trading. Really, basically every single technique that we teach and or have taught, I participate in those every week. So I do some of the micro moment trading, which Joe talked about, and Tim leads that with Joe every morning, which is in and out of positions in like a minute is a long time, but it's made possible only because of the proprietary intraday streaming chart of which I keep looking at. So you'll notice I kind of look over it because I'm constantly watching my charts as well to see if there's opportunities for trading. But without that intraday streaming chart, there's just no way that the success and results can be obtained that Joe just mentioned. This week,
hey, Randy, let me say one thing. People see this is Micah's son that you see here.
Micah shaved off his beard and stuff.
Get that info. You're my age, you forget things real quick. So,
Micah's like my son. My son's 41, but if he shaves his beard off and cuts his hair short, he looks like he's in high school. So,
yeah, it's a quite massive change. Even for me, I had it for like 2-3 years. So I look in the mirror and I'm like, "Who is that? Goodness gracious!"
It's a good thing to have, Micah. You'll appreciate it when you're 50, and people think you're 35. So that's pretty good. But anyway, what I've actually been doing a little bit more of the last week or so are actually some credit spreads on a daily basis for SPX. The SPX, the index, which is the S&P 500 index, the premiums are like sky high. They're extremely expensive for the intraday streaming micro moment trading. So positions that I used to pay maybe $10 or $11 a share for the contract, they're now like $50 and $60. So it's a whole lot of capital to use on those positions. So instead, I've actually just been doing call credit spreads. And they've been working out really well and actually able to hit my goal of earnings every day with the call credit spread, which is still watching the intraday streaming chart and identifying like the top where the momentum is changing to go down and go out and enter a call credit spread. And so that's another technique that we have taught in the past, and there's all kinds of things that are useful. There's always some way of generating income in the market, no matter what it's doing. Did you have a question, Micah?
Could you quickly define for people what a credit spread is?
Oh yeah. A credit spread is a little bit different. Normally, I do covered calls, and a covered call is buy the stock and sell a call, and that would be a debit because money's leaving your account. A credit spread is actually where, from a call perspective, we buy a call at a way out of the money strike. Out of the money means that the strike is much higher than where the equity is currently trading. And then we sell a call that's a strike below that. So you actually get a credit. You get money into your account. It doesn't take money out of your account. It gives you a credit for doing that. And then if the equity keeps going down, when you want to enter the call credit spread is when the equity is high and starting to go down. So then the value of that credit gets lower and lower and lower and lower. So you could either let it expire or take your risk off altogether and buy it back for a whole lot less. So sell it for $1, buy it back for 20 cents. You make 80 cents a share, and then you're done. You have no more risk left because you've closed out that position. So it's great for when things are changing and going in one direction or the other. You could do a put credit spread, but I'm not doing those because the market's kind of going down, these days. So I'm, excuse me, I'm getting ready to cough. I did get COVID a couple of weeks ago. I'm over it as far as I don't have the virus anymore. I tested negative and all that stuff, but the cough kind of lingers for a while, they say. And so when I talk nonstop or talk a whole lot, then it typically kind of brings a cough every once in a while. So, but anyway, that's how I have been generating daily income in the last few days. And because the volatility is so high, that's what's made the premiums be just horrendously high. And so doing the micro moment trading, which is buying the call or buying the put and then selling it for a profit as it goes the direction, I've changed to the credit side for the credit spread side for a bit. Still doing covered calls. And as I said, a covered call is buy the stock and sell a call. And the call gives the right to whoever you sell it to buy the stock back from you at the price that you've agreed to sell it for. And when you sell a call against the stock you own, you generate revenue. Income comes into your account. The cash comes into your account immediately. And then you just wait for the expiration of that option, or it gets called out. And called out means you actually sell your stock. So the most conservative process you can use if you want to be invested in the stock market is an in the money covered call. And that's what we teach. As a matter of fact, Joe and I will be teaching this weekend the 2-day covered call seminar that actually teaches all the rules. And that's one of the things that really drew me to the micro moment trading processes is a set of rules. Everything is rule based. We have a set of rules for selecting, entering, managing any of the techniques that we have. You follow rules. We're not speculating. We're not guessing. We're not hoping. It's a set of rules. You learn the rules and you follow the rules. So we're going to be teaching those for the covered call process this weekend on Saturday and Sunday, 9 o'clock Central each day is when it starts. And if you want to attend it, you can go to www.micromomenttrading.com and you can register and sign up. But the covered call is the most conservative process that you can do because it's even less risky than actually owning the stock. If you've decided you want to buy stock, if that's just what you want to do in the market, then selling a covered call, and in the money covered call against it, makes it be more conservative because it lowers your risk in that position. And what that is say you buy a stock for $50. I'm sure there's a lot of stocks that are around $50 range. You buy that stock for $50 a share. You have to have at least 100 shares because one contract is 100 shares of the underlying stock. But you buy 100 shares of a $50 stock and you sell the 45 call for this coming month. That means you're going to give the right to somebody to buy the stock back from you at 45. You buy it for 50 and you sell it for 45. You say, how does that make me a profit? Because that option, when you sell the option, the 45 call, that person that buys it's going to pay you like $10 a share right up front. So you pay 50, but you get 10 back immediately. So you really only have $40 invested in that stock. So if it gets called out at 45, you're actually making $5. You've got all your money back and a $5 profit on top, which is like a 10% return. And you do that for the month. And then you can go find another stock if you get called out. If you didn't get called out, you sell that call again for the next month and get another $8, $9, $10 a share. And you can keep doing that for as long as you own the stock. We also have a process and technique for those that already own stocks.
Go ahead, Joe.
No. You're for if you already own stocks and you don't want to sell them, we sell an out of the money call. We call it a fast cash, and we sell an out of the money call to bring income in on a weekly basis, and you don't get called out because the strike is higher than the price of the stock, and you don't get called out, but you can generate income on a weekly basis. It's almost like getting a dividend every week. And because you own the stock, if it does pay a dividend, you get the regular dividend as well, but you can generate income on your stock, like renting a house. You're renting your stock out every week. You've probably just been sitting on it for a long time. You could be generating income every week on that stock by using the technique that we call the fast cash. And we teach all that, how to do it, in our 2-day seminar that's coming up on Friday and Saturday, or Saturday and Sunday, not Friday and Saturday.
Let me say one thing. Randy's been doing this for 16 years, and he took our first seminar in Atlanta. And we didn't know Randy, and he came there. He was with a very large company that I can guarantee you every single person listening here today has used at one time or another, maybe multiple times. Yeah, he was there, entire company, the only company he ever worked for. And they were going to have a big retirement program. He was eligible. He had the ability to retire where many of his cohorts could not, because he could make a great living off the stock that he had. A lot of them had the same stocks or the same number of shares, but couldn't retire because the dividends weren't that fantastic. Yeah, but he was able to make tremendous amounts of money. So he was able to leave the company, and he's been doing this now for 16 years. And that just shows you the power of that technique. Yeah. So.
Yeah. Yep, Joe. I came to my first seminar was in 2006 in Atlanta. That's where I learned. I began learning. The learning process continues. I mean, you get better and better and better as you attend more and more and practice and ask questions and get coaching and go to the seminars. And in 2007, I was able to take an early retirement buyout package and have been controlling myself by myself. That I don't have to get up and drive an hour and a half to work every morning and drive an hour and a half fighting the traffic on the way home every day. I don't have to do that. Anywhere where I have the internet and I carry my laptop, if I'm not at my desk, I have my laptop in my backpack somewhere. And if I can get the internet, which my cell phone is a hotspot, so I can get the internet just basically anywhere. I can do trading. I can generate income at my time, in my location, when I want to do it. I'm not tied, other than I'm tied to the hours of the market when I want to do that. But I'm not tied down to, you have to do this at this time to go do that. It's very nice to have that financial freedom. I play baseball. I'm in a men's senior baseball league, and I got my shirt on. I'm getting ready. Actually, we have practice right after this podcast. I'll be heading over to practice, getting ready for a tournament in Asheville, North Carolina. So you can come see us play in Asheville, North Carolina. But
you have autographed pictures, right?
Yeah. Well, I actually there actually was a photographer one year. I was pitching in the stadium, the Cincinnati Red Stadium, their spring training stadium in Goodyear and Goodyear, Arizona, and a photographer was up there and taking pictures, and he actually made a baseball card up of me and sent it to me. I didn't ever even know him, and he just out of the clear blue, he just mailed them to me. So I do have baseball cards, but I don't think anybody would really want
Randy, let me ask you a question.
Yeah.
This is completely off of trading, but did you ever play AAA or double A ball?
No. I played intramurals in college, but I attended Arizona State University, and the baseball program there is a little bit better than a minor league team. when you have guys like Barry Bonds and Rick Monday and
wow
and guys like that are they're playing you. I was not quite that good, but I enjoyed playing, and I've been after coaching my son for many years in Little League. I started playing again when I was 40, so I've been playing for about 25 years again now. So, but I'll always enjoyed doing it, and so it's fun.
Yeah, they've been able to trade many worlds important. Randy trades from islands down in the Caribbean. In fact, Cezanne, who trades with Tim just joined us in the Micro Moment transactions, is on her way to St. Thomas, isn't it, Tim? Now,
that's right. John St. Thomas, in fact, should be there.
Yeah, she'll be trading.
Joe, that's right. I traded on the beach in St. Thomas for a week when my son got married down there. Or his wedding was down there.
Yeah.
I mean, he's a United States. His license, but they had their wedding down in St. Thomas. So during the day, I just lounged here out on the beach. That was a kind of a private beach from the resort, and internet from the resort, and had the laptop there under a shade tree, watching the iguanas run all over the place, and it was great because again, as long as you have the internet. And you got your laptop or your iPhone or your iPad or whatever that you use to trade with. It's so flexible these days. You used to have the desktop, computer.
Yeah.
When I started, there weren't laptops, so you had to be at your desk at a desktop. A huge thing. But now it's so flexible with all the different ways you can access your broker's platform that we had a great time. Generating income while I was getting ready to shell out some money for the wedding stuff, but so it was nice. I could earn enough to pay for the wedding and the trip and stuff while we were down there. So it's just fantastic to be able to have that kind of flexibility to generate income. You have control over generating your income, and you can do that when you want to do it, not do it when you don't want to do it, and be wherever that you want to be. You're not tied down, and also I can go to all my grandkids' activities, their sports games. I just got back from North Carolina where my granddaughters were in a dance competition, of which my granddaughter got number one in the competition. So I couldn't do that when I was working, right? But when I was working, I couldn't go on a Friday morning and drive up somewhere and go to an activity because I had to go to work. Yeah. And I don't have to do that anymore. I can go when I want to go. I can, go to their house, trade a little bit, go to their activities, come back. And it's just so much nicer than being tied down to that, the 8 to 6 job.
I'm going to interrupt Randy. Right here and say, hey, Tim, when we started off, I gave a brief explanation of what you do. Yeah. You might bring them up to date and see if you can be as wordy as Randy here and bring them up to date.
Now remember, Tim's trades are very short, so he doesn't have much to talk about. My trades are much longer term, so I have more to be able to talk about.
That's right. And I love listening to Randy anyway. So he's the master explainer.
And Tim, I introduced when we first started off the television, the televised program here. introduced everybody to Micah's son, who's with us today. So.
I was wondering who that young guy was, right on top of me there, and it's not very often I see him without hair on his face. So holy smokes!
Yeah, one more thing about Randy, and then I'll be quiet. You can go to www.micromomenttrading.com and find out everything you need to know about Randy's services and his schedules, and because he gets individual seminars, as does Tim. And you can get both their schedules off of that website, micromomenttrading.com, and what they charge and what freebie sessions you get, all kinds of stuff. Go ahead, Tim.
Yeah. So what I do obviously is much shorter than what Randy does, even though Randy has as much success doing, our technique as he does the longer form. So, and Randy does everything. He tries everything and does everything, and as far as I can tell, succeeds at everything he does. So he's someone to emulate in what he does. Anyway, I'm one of the instructors here at MMT, and we do the daily micro moment trading sessions Monday through Friday, starting at 8:30 Central to about 9:30, and we actually went to 9:30 today. And we do very short trades. Our trades last anywhere from, 5 seconds to 30 seconds to a minute. In fact, if you're in longer than a minute, you're probably in too long.
Did you do any more this morning after I left?
No, there's no other trades. And I typically teach this session each morning along with our expert analyst and trader, Cezanne, who actually was one of the first people to do this some years ago, and she's rejoined us and doing obviously very well again. And as Joe mentioned, she's on her way to the islands and will join us again tomorrow. But anyway, what we look for are changes in momentum, breakouts, as it were. We look for a sudden rise in volume coming in, which gives the market maker the opportunity to push that price, which we call price action. And we trade off of these small moves. And the only way we can do this is with the proprietary charting system we have. And I'm sure Randy's already talked about this a bit. But our proprietary charting system allows us to see when momentum is exhausting and about to change direction. It gives us a hint, just in the way that it's laid out and the unknown number of live feeds that go into calculating our graphics on our charts, shows us very visually when a stock or a strike is about to change direction, and gives us little subtle, it's almost like having a bit of a crystal ball in beginning to see the beginnings of momentum happen. And it also shows us when exhaustion is about to occur. So we trade that momentum, and that momentum is based on volume, right? Because we have to have volume to have price action, to have breakouts, to be able to trade. When those things happen, as they do pretty much constantly throughout the day, we're able to trade those moves and make money. And our profitability is, when we talk in terms of pennies, it's not unusual for us to make 5 cents, 8 cents, 10 cents, 20 cents, and we times that by the number of contracts that we have. And as most of you know, this is the most highly leveraged form of trading you can do. We control, each contract is made up of 100 shares of Apple. So for, say, $2.50, we can control 100 shares of Apple without having to own it. We're simply borrowing 100 shares in the form of a contract, and we never buy it. We just borrow it for a little bit, let it become more, let it increase in value, and then just sell it off, which is great. We don't have to have a lot of money to be able to trade options because it's 100-to-1 leverage. And we figure our profit in pennies, but it's always pennies times the amount of contracts you have. So if you bought trading 100 contracts of Apple and you made 5 cents, you'd have made $500, which we do over and over and over again. We get that money back, we trade it again. And this is one of the great parts is we just keep reusing the same money over and over and over again. We don't have to buy 100 shares of Apple and then, let it sit. We just simply borrow the value of that stock, make a few pennies, and sell it back. And it's that simple. And we're actually in cash 95% of the time. Never hold on to anything overnight or multi-day. That's another technique altogether, which Randy is working on. But we get in and we take a bite and we get out. And it moves fast. We make our money and we go to the beach. And
let me say one thing. We only, when you do a macro moment, you only trade, besides Apple, we only trade indexes. In other words, we're not trying to decide, hey, Apple's going to go up. We trade Apple like it's an index because it's probably bigger than most indexes. But other QQQs and other SPYs and other index, we trade those because we don't have to worry about trying to pick something because you're in and out of these things so fast. We're not, unlike Randy, who has such a wide range of different types of trading. Sometimes he'll be in them longer. And so he has variety. He just has to pick stocks that meet our qualifications. And we just trade indexes. We don't worry about it. And that's all we do. So on the micro moment. Yeah. So.
Yep, absolutely. So it takes out that whole question of what are we going to trade today? Because we're not trading the strength of that stock. We're trading the volatility within that stock, known volatility. And we believe we have the best three because
because of that we don't run into stuff like this.
Oh wow.
Yeah.
What
it says is millions of Pennsylvania public school pension funds are invested in Russia. Well,
oh yeah, and Russia trading is halted.
Yeah.
The U.S. stock exchanges won't trade Russia stocks right now. So anybody that had was investing in any like Russia companies, they're on hold. I guess they can sell. I think the exchanges will let you sell, but I think the Russia stock market's been closed now for 3 or 4 days.
It's closed down right now.
You can't. I mean, no one in Russia can even do their own trading or whatever. So that's that. But that's a good point there, Joe. Is we trade on the U.S. stock market and we trade U.S. stocks.
Yes.
My suggestion is the folks who do that trading for the Pennsylvania Public Pension Fund attend our seminar this weekend.
Yeah, that would be a good idea for them. That would be an excellent idea. They could actually learn how to do it the right way instead of their speculation that they have going on.
Yeah. I wish there were a way that you could send them a link, frankly. I think that's a great idea.
If you have any questions or comments, go ahead and use the tool there to make your comments. We're glad to answer any questions. So.
Yeah. But anyway, I want to follow up on Randy. Yeah, we trade American stocks, American companies on the American exchange, the strongest and most regulated system on the planet. We can depend on it being there from day to day. And that's huge. We couldn't do that. I just don't know anywhere else we could do that. We'd never trade a foreign stock or a foreign exchange. So, I mean, and I'm proud of these. I'm proud of the fact that we have that here and we can do that. And the reason that we picked these three, QQQ, which is an ETF, SPY, which is an ETF, and Apple, is that they are thickly traded. Their options are thickly traded. They're in the thousands. The underlying stock trades in the millions, and we trade in the thousands. That creates a market that is highly liquid. We can get in and out of positions quickly because there's a lot of participation in these option markets. And they, like I said, they stay very liquid, which is an advantage to us. But here's the biggest thing. and I think Randy has touched on this, is that you do these, whatever technique you choose, you are taking control of your financial future. And the most valuable thing that you have is time, right? Can't replace time. Um, so you get the money thing taken care of, and then you have the time that you want to do whatever you want. Go play baseball at 60, whatever you want to do. Um, and that's really at the core of what we do, is that we create time value with these techniques. And I just don't know anywhere else you can do that.
Tim, now one of the huge benefits of your micro moment trading, you're back to cash by the end of the day. It doesn't matter who drops a bomb on who, or what company collapsed overnight. It makes no difference. People that own stocks and things like that, they could wake up the next morning, and before they could even do any trading, they could have lost a huge amount of value. But you're back to cash. You don't care what happens to the market overnight, because you start all over every day with whatever the market's doing that day. I mean, that is especially these times in the market, when you have no idea what's going to happen even from hour to hour, because it's trading on somebody just said this, or this just happened. Yeah. The market reverses and totally changes, which is great for the volatility that you're looking for. But when you're done, you're done. You're 100% cash, and you're waiting until the next day. You don't have to. You don't even concern yourself with what's going on the rest of the day, and you just start all over from wherever it is the next day. I mean, it doesn't get any better than that. It just doesn't get any better than that.
Randy, it's even better than that. We're only in it for an hour.
Exactly.
The first hour of the day. Forget about the day stuff. That's right. Yeah. So,
and you're just using the same money again the next day. It's not like you have to have more money to go and invest, because you're getting it all back, and then you're using it again the next day. And it's that there is no better technique and process especially for this day and time when this in our market than what Tim teaches and does every single morning.
Yeah. You know, if you just take, I use this, I talk about this almost every time we do this show, $2,000, put in your account and learn that technique. Use virtual money so you don't risk it at all. And then when you're ready to trade that $2,000 within 24 months, if you just got 7% a week, Tim gets 100% a week, over 100% a week. And if you just do some of his trades, you're going to make 7% a week, easy. You're going to have in 24 months something like $500,000. That $2,000 is going to compound to $500,000. You're never going to put in another penny. And then 7% on $500,000, $35,000 a month or so you'd be making. You just continue on with the 7%. So, and he and Cezanne and Marion, like I say, make 100. Well, they were 160 some odd percent last week. So,
yeah, absolutely. And I love that point. Is I never worry about when we're done, and actually we make probably the majority of our trades in the first 5 to 10 minutes of the market when volatility is at its best. And we're done. And when we're done, I don't look back at the markets. I don't care what they're doing. I get up the next morning, turn on CNBC, see what the markets are doing, look at the overnights, and then start trading again.
And it doesn't make any difference if they're up or down. Red or green doesn't make one bit of difference.
I don't care. As long as it's moving one direction or the other, that's all we want.
Yeah, and you're just going with whatever direction it's going. So it makes no difference. It could be going down 800 points today, and you're just trading the downward side. Right. If it's going up 800, you're just trading the upward side. And so it makes no difference. And the more it changes, the better it is for what you do.
Yeah, I started to say, Rand, what you just said, it's even better if it changes radically. If it goes down 1,000 points, it'd be better than it just going down 50 points.
And it looks like the Dow's had about a 200-point swing here from positive to negative. Well, actually, a little more. We're looking red across the boards now. So, and that for us is great opportunity. had this really big push down. Looks like about 10:45 that started happening and push down. Anyway, we look at that, we see that, and most people are looking at going, "Oh my gosh, I just lost thousands of dollars in my portfolio." I'm looking at this and going, "Oh my gosh, I just made whatever on it. What great opportunity!"
I think the key to both of y'all's services is when the people subscribe to them is that you're teaching them how to do this. You're not teaching them how to have luck. Randy's and Tim are teaching you to use that chart, which tells you exactly precisely when to buy and when to sell. That chart's telling you. You're not guessing. And they teach you how to interpret that chart and how to use that chart and what the lines on that chart mean. And that's why it's such a valuable service, because again, they're not teaching you how to have luck or say, hey, go on there for the first hour of the day or whatever, because that's a good time, that's a lucky time. That has nothing to do with it. I mean, yeah, it's great because of volume, but they're teaching you how to do this. That's what's important.
Yeah. So. Yeah, because we are first and foremost a teaching organization. We're just simply demonstrating how to do the technique successfully. But it's all about you. And it's all about getting you up to speed on what we do and allowing you to, take responsibility for your financial future. I'm sorry, Mike, I was stepping on you there.
No, not at all. Not at all. That's a really, really important point, right? That's something we gotta focus on. I was just wanted to come back around to the fact that like making money in a downwards market or a downwards move is really it's an awesome ability to have, right? Mm-hmm. It's also very clear that when things move up and when things move down, it's very different. Do you guys have any kind of tips on why those moves are so different? What is happening in the market and the behavior of people to lead to such different, like a slow climb versus just a fall off? Why does that happen so differently?
Mm-hmm. First off, it's all fear and greed. That it really boils down to that.
Yeah,
it's greed that says, "Oh, it's going up. I'm going to keep buying. I'm going to keep buying," and then all of a sudden it tanks and people lose their money because they're so greedy. What Tim's not greedy. He takes his profit right at the beginning. He's not sitting there waiting to say, "Oh, I might double my money today." It's in. Set your target to leave and get out. It doesn't matter what it did after that. It doubled. It doesn't matter. You got your profits. So that's one problem is the greed of people that drive them to do things that they probably shouldn't do. The other one is fear. There's two types there's fear on two sides. Mm-hmm. There's either fear that, oh, I got to get in because I'm losing money by not being in there. Look at it, it's going up. And they get fear of missing out. They call it FOMO. That you got to get in, you got to get in. On the other side, there's the fear of, oh no, it's dropping. So when the market starts going down, people get afraid and they sell, which makes it go down even more.
Right.
And then the next week it's back up again. So they lost their money on purpose. They made the decision to lose their money. But you see, with our process and techniques, we don't sell for the loss. We manage, well, it depends. Tim gets out really quick if it's going the wrong way. Right. But for covered calls, if the stock goes down, it goes down. If you picked a good, solid quality company, it's going to come back up eventually. And we have the techniques to keep generating income on that week after week after week while it's working its way back up. There's no guarantee that the market's going to go back up, but there's never been a time in history where it hasn't come back up. Back in 2020, 2 years ago, right? We had the shutdown, the government shut down the economy for COVID, and the market dropped about 35% in 5 weeks.
Right.
Well, it just hit an all-time high the very first day of this year. All-time high. It had never been higher before. We're in a decline right now. I think we're down 15%, 12%. I mean, it seems like, oh no, the sky is falling. But we're only down 10 or 15%, which is kind of a normal process for the market from year to year. Will it come back up? We suspect sometime it probably will. I mean, there's no guarantee that it will. But if you're in a good, solid quality company that you said, this is a company I'd like to own, there's really not a big reason to sell it for a loss. You can learn the process to use it, as Joe usually says, like you buy a house to rent it out. You've bought that stock, you can just keep renting it out to generate income for a long term, and not have to sell it for a loss. So
one thing about Randy's trades, though, say Tim, he's in and out fast, so he doesn't care what the market's doing. Randy, it does the exact same thing. He goes into a stock. Let's say he buys Apple. He actually buys the stock, and he's going to sell calls. He's generating income, like renting that apartment. And if the stock drops immediately after he gets into it, he's going to make money. And that's his technique. And then if it goes back up, he's going to make money when it goes back up. So it doesn't make any difference on Randy's positions. He's going to make money by just the movement in the stock. And all the time, every time he makes money, he reduces his cost in that stock. So if he's in Apple long enough, he's not in there for $200 or $300 anymore. He can get to zero. And then he's got an infinite return on his money. Now, Tim's different. He's not in anything. He's in fact, his biggest problem is our clients to do 2 or 3 trades and they tell us they're going off to the beach.
Yeah.
They're leaving for the day. They're through.
Yeah. We lose half our audience,
First
before
15 minutes.
where the call is, but then again, we taught them to do that. So
Yeah.
that's the whole goal of being able to be in and out in a minute or two and get a couple of trades under your belt and you're done for the day and you do whatever. I mean, some people do that before they actually go to work in a regular job. Some people go out surfing afterwards.
Oh, yeah.
Some go play golf.
We have a lot of people out on the East Coast because when the market opens at 8:30 Central Time, it's 2 hours earlier on the
West Coast. On the West Coast.
Earlier.
Yeah.
And so they're a long time before they ever go to work. They're through.
They've done and earned their money before most people are eating breakfast.
Well, I know. Well, Micah did when he lived in Seattle. Poor guy had to be up at 6:30 to start trading and being prepped. But he was always there. But it was like, man, the dude is done by 7:30 and can be back in bed sleeping for another couple hours.
Yeah. And Micah made so much money he had to change his time zone.
There he goes. Yep.
Yeah.
He got closer.
There were a few benefits for changing time zone, but yeah.
But
not waking up at 5:30 anymore though. So
one thing is, if the market's going up, everything doesn't go up. There's always something going down. If the market's going down, everything doesn't go down. There's always something that's going up. Like right now, energy and oil. If you're oil, natural gas, those stocks are just going through the roof.
Yeah.
So even though the overall market has been going lower this year, if you selected the appropriate company, you got a big profit. And so it does come down to the charts. We have the proprietary charts that let us know what's the momentum, what direction, where is the highest probability that this is going, whether it's the moment by moment one that Tim uses, the intraday streaming chart, or whether it's the daily advanced chart that I use and teach. We use that to help select the strong companies for the current trading environment. So I have one ETF, the VXX, which is the ETF for the volatility index. And I've actually had that position probably for 4 or 5 months. And like Joe said, by generating income on it week after week after week, I now have about 26 cents a share invested. And my current position is deep in the money already. And I could actually close it if I desired to for a $4 return. 26 cents is all I have invested. I could get $4 back right now, but I'm generating 35 to 50 cents a week of income on that. So I'm just keeping in that position, generating income week after week after week on a basis right now of almost a quarter.
Mm-hmm.
So overall, I'm really almost generating 100% return every week because my cost basis is down so low from all the money that I've already generated on it.
And Randy has another tool also when you go to his service, is that since he can use a variety of stocks, where Tim just uses one or two, Randy can use a variety. They just have to meet our qualifications. In other words, the qualification is sure the company's not going to go out of business. And it pops up every hour, the highest yielding covered call positions in the marketplace. And so you have that ability to pick them out, and Randy can pick out a variety of stocks from that because it's going to change, but they're going to meet all the criteria. You don't even think about it. You know they're going to meet all the criteria. They should stay in business. Anything can go out of business, but they should, majority of them, obviously stay in business.
And that is the powerful part of what Randy does, from the chart selection to the option selection, how long to stay in it, when to get out. Mm-hmm. We've been talking internally about this concept of getting to the point that you're not trading, having mm-hmm. a goal of not trading, because you come in and you perform a repeated task that has these steps, just like brushing your teeth or walking the dog. You got to go get the harness, grab the leash, put it on, clip it, give them a treat. There's just steps that you have to do before you walk, and then you get back, right? It's a repeatable process. So
I didn't realize it's so complicated walking a dog.
Well, we have a bit of a reactive dog, so he needs some extra safety precautions that we do for him. But yeah, anything has that set of steps, and getting to the point where you trade less and less and use less and less judgment calls and less. There's always going to be discipline, right? But less emotion and choice that you can put into it, and just follow a set of rules, the more consistent you're going to be over time. So Randy's technique especially is so conducive to that, because every single step has an A or B. Okay, if it did this, we do this or this. If it did this, we do this or this. So it's a very great process.
Yeah, and that's a great point. Is we're a rules-based trading technique. On both sides, we have, because of our type of trading so short, we have very few rules. In fact, it's just one really that we have, but it's a rules-based trading. I mean, how we select our in points and our out points, what we're looking for on the charts, are very specific steps that we take, so that it does take out the emotion out of it. And Randy was talking about, fear and greed, which are huge. Everyone's got that, and we're always battling that. Well, our techniques are designed to eliminate those factors in making that's a trade decision. So it's like trading by the numbers is really.
Yeah, we gripe at people during that seminar if they're in a transaction as long as 30 seconds. We just really get irritated with them. Why are you in that trade? You could have already been out of it. Blah 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 blah.
Yeah. 30 is pretty quick, but yeah.
Yeah.
Yeah, fantastic. Any input into next week? I guess I always try to ask this question. It always comes back around to the same thing, because it doesn't matter if it goes up or down. But any kind of thing for people to look out into next week that you would recommend? Any sort of practice routines, anything like that you guys are going to be doing?
Yeah, don't invest in Pennsylvania public school.
Yeah, yeah. Don't get into those.
Yeah.
In fact, I just heard a report on CNBC earlier this week that the majority of hedge funds are like negative for the year, and those are the professional traders, right? Those are the ones that know it all, and their portfolios are all down because the market's been going down. There's all kinds of things out there that are going to make this market go down.
Mutual funds publish is that the average mutual fund in the States, a good one, makes between 6 and 7% a year. Now today, Tim and over Randy's side probably made as much. They're up 24% for the day, not for the year, but for the day. How can you compare that to a mutual fund trying to make 6-7% a year? And maybe Micah might know. I've asked this question many times. I know Tim and I know Randy don't know. What do those guys go? What do they do when they go to work? Those mutual fund guys. They just sit there? What do they do?
I don't know, Joe. You worked for Merrill Lynch.
That's right. Yeah. I mean, I was a broker. I wasn't in their mutual fund, but I don't know what those guys do.
They call people and try to get them to give them money.
That's right.
That they can earn 6% a year, where you can do that in a day, just by learning the micro moment trading that Tim does. You can 6% in a day that's really not outlandish.
No.
Or the results
at Merrill Lynch, we had a coffee room, and 95% of the time, 95% of the brokers in that office in that coffee room talking about how crazy their customers were.
But one thing I want to just go back to one thing that Tim said, and Micah reiterated it. We when we teach and we show you how to do things, we're actually doing those with our own money at that time in our own accounts. We're not just making up, this could be, oh, look at, you could have done this, last week it would have been, these are what we're doing right now with our own money. So you get to see that we practice what we preach, so to speak. I mean, we're doing it, and we're showing you how we're doing it with our own live position. So that's different than most other groups are going to do.
Randy, it's going to get better if we can ever get Micah to finish instead of attending these kind of things. He's going to do the software where you'll see those trades from Cezanne and from Tim, and you'll actually see those trades as they enter, when they enter a position and when they exit.
As they're going.
Yeah, Michael, that's still going to work, isn't it?
Yeah, Ben and Dirk are on that right now.
Good.
Yep.
Good.
On a lot of things, coming down the pipe.
Good. Indeed.
Fantastic. Awesome. Well, I want to thank everyone for being here today. What a crazy week, right, in the market, and what a crazy month in the market February was. So I'm pretty sure we cannot foresee what's going to happen in March, but I'm sure it will be eventful. Unfortunately, I'd like a really boring month would just make me really happy. If we had just a month where it was just crickets, nothing happened, man, that would be. Quite nice.
Tim wants it to go up and down a whole bunch.
He needs volatility.
Because that's the volatility, and that's what makes that micro moment trading in and out in a minute and back to cash when you're done each day. That's what makes that be such a fantastic process for this time in the market, because nobody knows where this market is going from a day-to-day perspective. It's driven so much by the moment of what's happening that changes constantly. And from the hitting the high of the day so far at the opening of the market, going way down, coming back up now, it's just crazy. But
I can assure you, when you go to Tim's seminars, you go to Randy's seminars, you are going to be bored. And a perfect example will be this weekend when we do the 2-day covered call seminar, because they'll both be there, sort of, 10 minutes out and Randy there, and you'll be bored. Yeah, I guarantee it.
You get to learn how to take over your own control of generating income.
Yeah. And they keep telling me to turn the page because I fall asleep during the pages.
Yep.
There'd be no excitement on the site at all. So.
Yep.
Well, I know this weekend you guys got your the 2-day covered call. Then the next weekend I'm doing the MMT intensive, and
fantastic.
Yeah. So if you want to see what we are all about with that technique, please join us next Saturday. You can go to our site, which is scrolling across the bottom right now, and find the tab for upcoming events, I believe. What is it?
Yeah, seminars, workshops.
Yep. And go to that, and you can go ahead and sign up and get a place in there. But that's really the best places to learn what we're doing. And believe me, it is well worth your time.
Because virtually all these techniques, you get a free trial.
That's right. That's right. I mean, look at that. We'll teach you everything there is about it. And then you can go ahead and come on for free for a couple of weeks and try our techniques. Great, just great opportunity, great deal.
Yeah. Fantastic. All right. Thank you, everyone, for being here. Appreciate you guys.
All right.
Thank you.
We'll see you next week.
Hope to see everybody this weekend. And have a good weekend, everyone.
Okay. Bye-bye.
Take care.